It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, talking your property news 7 days a week, including on a Sunday morning with our breakfast, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. It is a Sunday morning at November the 10th. Now, here is a sobering statistic because it doesn't include us. According to Bloomberg's Billionaire Index, the wealth of the world's 10 richest individuals surged by a record $64 billion in one day. Last Wednesday this happened, the day after the general elections in the US, marking the largest single-day increase since records began with the Bloomberg's Billionaire Index back in 2012. Elon Musk, the world's wealthiest person, gained $26.5 billion. Remembering, this is in a single day, pushing his net worth to $290 billion. And others to gain big time includes Jeff Bezos, Larry Ellison and Warren Buffett. You get what you vote for, and in this case, the struggling person living from paycheck to paycheck who voted for Trump last week won't see any of that money. Well, coming up next, we've got the best of real estate and some of those key interviews.
Ready to step up your property knowledge? Access powerful insights with us.
What we're finding in many markets that the sort of sub $1 million price bracket, the first home buyer bracket in many places, certainly in Sydney, we're finding that that's a really competitive market segment. And so they're not sort of even really focused on, I'm trying to buy now before prices go up further. They're just really focused on trying to get into the market. So it is a very different dynamic. I don't think there's a lot of conversation in our cohort anyway, and maybe it's because they're educated home buyers, but there's not a lot of conversation around trying to beat any future price rises. It's really about getting the right property now and securing it now for a fair price.
All properties are not good. That's right. And I remember at the start of the year, we were talking about that kitchlet that was reported on in Sydney. I forget how big it was. It was just a shoebox size. What do you do when, somebody comes to you and says, Veronica, look at this. I can get into my first property. It's only 25 square metres.
Sometimes what we do is sit down and show them case studies of how these properties underperform over time, and the gap between where they're at now and where they need to be gets wider and wider. And I think that that's the scary thing for buyers. There's this rhetoric around that you just got to get in. It doesn't matter what you get, just get on the ladder. But, if you do buy the wrong property and if you do buy something that's got a very small resale pool, then that can cost you a huge amount of money over time.
I mean, this wasn't a thing when I bought my first property. I mean, I remember distinctively 1,500 square metres. I bought the 3-bedroom property, subdivided. I think I only paid about $45,000 for the property, subdivided, got $18,000 for the land. And it didn't occur to me, I'd be having this conversation in 2024. Ignorance was bliss back then because these little kitchlets and so forth just wasn't around. It wasn't part of the market.
Well, weirdly enough, my first property was a 36 square metre studio.
Right.
So I can, a long time ago now, and I can speak to that. This was before the 50 square metre rule sort of came in with a lot of banks. I was able to borrow, his money was free, obviously, or freely available. I was able to borrow 95% of it. This is a long time ago. But in the time that I literally outgrew it in a year. So then I moved out and rented it out. And then 5 years later, I needed to buy a bigger home. And by that time, I'd coupled up. And I couldn't keep this property because the banks had all changed their policy and were no longer lending readily for properties under 50 square metres. So when I I couldn't keep it, even though I could afford to keep it, in the sense that the rent was actually paying the mortgage. But the bank's policy changed, so therefore I was forced to sell it, and there were not many buyers around. Now, yes, I did make a small, modest profit, but that was luck more than good design. And if I think back to when I did buy that property, I never even looked at other options. It felt safe to me because it was cheap.
Yeah.
And that's where I made my big mistake.
Yeah, well, I remember the bank because I was 19. They didn't even want to loan me the money, but they had to because I ticked every box.
Well done on that, by the way. But, again, luck from the sounds of it.
I think the worst part of this podcast is people are going to be saying, Craig, how old are you exactly buying a property with $45,000?
I was thinking that myself, but, you did say you started at 19.
Every week, unravel the real estate market to empower your real estate knowledge.
Oh, absolutely. People can be very quick to choose, one of the biggest assets often of their life. But of course, you're focused on finding a fabulous new home, and you're looking around, isn't the view gorgeous? Oh God, there's cafes downstairs, lock up and leave. It's going to be wonderful. So you're not necessarily focused on the noise if it's going, or alternatively, the real estate agents have very cleverly organised the open time to be when the gym's closed or at its quietest because, something else is going on. So you may not even be aware that this is going to be an issue when you finally move in, are woken up at 6 a.m. to the sound of heavy weights being dropped to the floor.
Oh, so you're saying that the real estate agents are cunning with regard to this. I've got to sort of talk and speak up for these real estate agents because they will be listening and going, hang on, that's not me. I guess that can happen with some real estate agents, possibly that they do that. But here's the other rub of the green, and that is you buy your apartment and there is no gym below and it's perfect. And then 12 months later, a gym operator goes in there. And this is really the danger, isn't it? Because you just don't know what is going to develop below you.
Well, that's right. It could be a liquor store. It could be a tobacco store. We've had members come onto the forum to say that suddenly they can't get insurance coverage for the building because they've got a particular new commercial tenant downstairs. Now, they couldn't stop them. It's a perfectly legal business, but it's kind of known for bringing other issues into the area. So the insurers won't have a bar of it. The residential owners, they're caught in a bit of a trap with mixed-use buildings, to be honest.
Yeah, and if you have a look at the strata management's role in all of this, in cases like this, what responsibility does strata management have in balancing the interest? And this is the big one, I feel, the interests of commercial and residential tenants. Should buyers look closely at how proactive their building strata is before purchasing? Well, that's really a bit of a given. And the other part of that, with my question to you, is there a bit of bias towards commercial, sort of leaving the residential part hanging?
Craig, you've hit the nail on the head. Wherever you've got mixed-use buildings, and particularly if you've got a building management committee, which isn't governed by strata law, you've got the voting and the power weighted with the commercial against the residential owners. They're normally outvoted, so the commercial have the power. The power of an owners' corporation actually lies with the strata committee. The strata manager is there as a service provider to provide, administration and guidance on governance. But they're not the decision makers, or they shouldn't be, in a well-managed scheme. So they should be taking instructions from an active committee. But that committee may have its hands tied by the strata management statement for that building, which says that they have to have 100% approval to make any changes, or it's a council-approved business that's in there, so they can't actually challenge that. But then they're stuck without insurance, for example. So there's lots for buyers to beware.
I note from this particular problem that, according to the gym, they're doing everything legally responsible and meeting the code. Is that correct?
I've only read the same story, but yes, that's exactly what they're saying. And that's quite possible, but that doesn't mean that it's not impacting people adversely.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
Showing that the upper North Shore is becoming as popular as the lower North Shore, particularly due to value for money. Let's ask you, you're in the lower North Shore. What factors are you seeing regarding that?
I'm encouraged to see those numbers. I grew up on the upper North Shore, so I can see the appeals in those areas. To answer your question, I see the trend of people moving to the upper North Shore. Most commonly is the young families. One point I'd make probably on the contrary is I don't think it's purely an affordability issue. I think there's attractive buying up there and you certainly do get more for your money, but it's also it's a big lifestyle move for these young families. People who have either grown up on the upper North Shore, like myself, who have moved down to these harbourside or beachside suburbs, are looking to get their kids into schools, get into that private school band. And I think that's driving that move as well, and clearly is increasing popularity and demand up there because the numbers don't lie.
Yeah, so you sort of touched on it with the upper North Shore properties. They offer larger land sizes and more space for a similar price to those on the lower North Shore. I mean, that's got to be significant and is influencing the market, as you say, for families wanting to move in with a little bit more property.
Yeah, that's right. If I look at Chatswood's median at 3.35 and West Pymble at 2.8 and some of these other properties or average sale prices, you can spend that much on the lower North Shore and still get a nice family home, 3 bedrooms, semi or small house. But they're going up for that extra bit of land, but I also think to get closer to family and also in that private school band. That's a really big sell for that area, along with the train line.
Now, I don't actually have the data at my fingertips, but I think it's a fair call that if you look at the property prices for the lower North Shore, since COVID, unbelievable in growth. I mean, people have had massive windfalls on their properties.
Yeah, it's been exceptional. The challenge when you're reading data for the lower North Shore is the numbers can be skewed depending on how much upper end turnover there is. So for a suburb like Mossman, if there's half a dozen or a dozen sales above 15 or 20 million, that will inevitably increase the median price. For us, we monitor the whole market, and there's been price segments that haven't seen growth since 21 or 22. Most sort of commonly around that $2 to $4 million range has been a little bit stagnant. So there's actually good buying in that level. Anything above 5 million, we've seen anywhere from 10 to 30% growth since the start of 2021. So yeah, that price point's really healthy, which I think is driven a lot by returning expats coming into this area and spending foreign currency. They've been big drivers for us down here, which sadly does price out people who are looking to jump up from semis, townhouses, apartments into a house. They have become a little bit out of reach, which I guess then suggests the upper North Shore as somewhere to live.
Now, you mentioned that you're talking to all of these investors and they're selling some of their products. So that is adding to the supply. What are those investors, particularly over the last few months that you're talking to? I mean, where are they going to? They sell up. What are they doing after selling?
So probably in the conversations that I'm having with investors, they're selling in terms of what they're doing with their money. They might be looking to relocate, their own property up to, further north, obviously if they're at the end of their careers and maybe looking to retire. But, a lot of the younger owners are either looking to pay off their existing house mortgages or maybe just put the money into shares or something else like that.
That is interesting. I haven't heard that one before so openly discussed in terms of getting into the share market, and there'll be plenty of people saying, really, they are getting out of some of their properties in their portfolio, going into the share market. It probably talks to how the market has kind of moved a little bit over the last 6 to 8 months.
Yeah. Look, I think particularly in Victoria, it's interesting. Obviously we're across the whole country, we're dealing with higher interest rates, but under those circumstances, we've still seen, good, really good price growth throughout. Sydney, Brisbane growing 15% this year, Adelaide, and of course Perth going gangbusters over there. But Melbourne hasn't really grown as a whole over the last 12 months at all. And look, I guess you can really only put that down to perhaps the land tax. So I think as an investor, they're getting their land tax bill and also dealing with higher interest rates and probably not really seeing a huge return, particularly if they are holding a mortgage as well. So,
and I just want to come back to different postcodes around Australia, because you can be in one postcode and then two postcodes or even one postcode over. It is like living in a different planet. How does your suburb, Justin, in terms of Fairfield, how does that fit into other close by postcodes regarding price and, I guess, livability?
Yeah, look, Fairfield's a really unique suburb, actually. It's got a very vibrant central shopping strip that really underpins the community here with the train station and the schools. So, look, it does very much create a village feel that you're probably accustomed to, maybe an outer suburb or a country town. And look, we're only 6 or 7 kilometres from the city. And look, you don't see that in any suburb closer in. So it's really about as close to the city as you're going to see that sort of village and community feel. And look, we've also got, obviously Yarraband Parkland, that part of Fairfield really, and it's Melbourne's largest, bushland park. So it's got a lot going for it.
We connect you to the best real estate information across Australia. The Real Estate Podcast.